Hello everybody, Mark here at TSLA, and today on July 27th, 2023, unfortunately, Tesla closed in the red again, and this was a pretty substantial drop considering the intraday movement, but the closing price was $255.72. That is a drop of $8.64 per share, and in percentage terms, that's negative 3.27%. So before we take a look at the charts, let's just go over some quick news. First things first, we want to talk about some big economic data dropping tomorrow, which is going to be the PCE inflation index. As you can see here, they're kind of anticipating core month over month to be 0.2%, year over year 4.2%. What you kind of want to see from this is a beat on core, and I'm not really concerned about the headline PCE too much. But even as Powell said, headline is what normal people react to. It's the number that people talk about in the media. That is the number that a lot of people feel because if they own a home, if they own a house, if they own a car, like they don't really care about some of the core elements of the inflation index, even though the Fed does, which is kind of interesting. Core is made up majority of big ticket purchases. Used cars, new cars, shelter, rent, etc. So if you already have those things, you're not actually shopping for those things. You might not necessarily feel what is a so-called important index for inflation. So I don't know how you live in a world as a Fed raising rates in an environment where headline inflation has dropped considerably. Core inflation on the CPI has dropped and it's beating expectations, or missing quote unquote expectations. So at the end of the day, though, this is what's going to matter tomorrow morning before the market opens. I hope inflation comes in quite low for everyone's sake, and for Tesla holders, it is your only saving grace. It's our only saving grace. Unless rates come down, you're going to have a really hard time. With rates going up and staying high for very long, if you don't see cuts to interest rates by the end of this year, you're going to have a big problem when it comes to a long duration hold of something like Tesla. So let's go on to the next bit of news. This is something that came out early this morning, and this is from Reuters, and they were talking about Tesla creating a secret team to suppress thousands of driving range complaints. And honestly, I don't really care about this. This is something that Gary Black mentioned in a tweet about reasons why Tesla is selling off. Tesla now negative 14% versus the Nasdaq's negative 3% since the quarter two earnings report. Investors most concerned about further margin erosion due to potential price cuts, not supported by cost of goods declines, unfavorable media coverage of overstated EV range, and FSD regulatory risk doesn't help. The 10-year Treasury added 13 basis points today to 4%, also likely a factor today. Rising rates hurts long duration growth stocks the most. At the end of the day, honestly, it's kind of interesting for people who live in the market who don't understand what the price action is. Why is it doing what it's doing? We all look, I get it. We all want it to go up. If you own Tesla stock and if you're not short it, you want it to go up. But it is substantially selling off considerable amounts, underperforming almost any other ticker out there. It might as well just be what Carvana was earlier this end of last year. I mean, because there's very little interest, and if you just watch the charts during the course of the day, you're finding very little interest to prop this stock up. A lot of people who are putting money into the market, they're not buying Tesla. This is a story that they haven't sold themselves on yet. The idea of full self-driving and being an AI company, that is not able to be priced in. That's not even a sure bet. Those are the things that would make Tesla, kind of fall into that, that story of an AI boom. But at the end of the day, there is no tangible evidence that this is going to be a widespread feature that a lot of people are going to adopt, and that would easily pass many jurisdictions and countries, automobile and transportation regulations. There is a lot of hurdles when it comes to that. So I understand that an institutional investor, a fund manager, a pension fund manager especially, they might not be interested in this story because they're seeing through earnings reports, okay, that the likes of Meta and Microsoft and Google, they're talking about AI, but they're also kind of attaching this is a CapEx increase. This is a multi-billion-dollar investment, all going to what? NVIDIA. And we can kind of look at the NVIDIA chart with Tesla and some other comparisons so you can kind of understand what's going on here. But the bigger bit of news that a lot of people aren't talking about is this little bit of news. Let me zoom in so we can get a little closer on this. But so this came out at 1 p.m. Eastern Standard Time, 10 a.m. Pacific. This is an article released late into the evening. I'm sorry, early morning Japan time. This is from Nikkei Asia. This is almost like the equivalent of reading Nasdaq.com, but for Japan version. So Bank of Japan. The Bank of Japan to discuss yield curve control to tweak yield curve control tweak to allow rates over 0.5%. Central bank likely to keep current cap while taking a flexible approach. So Japan's in a tough situation, as we all know. You know, they from a structural point of view, Japan has really dire population problems, and those problems are an average aging population. There is less people being born. There is a labor problem because people are not having children, because from a cultural point of view, the family system in Japan might not really be beneficial to a woman who wants to live what in America would be a lifestyle of being able to provide for yourself, educate yourself, and have that balance in the way that you want it to be. Whereas in Japan, that the culture might not really lend itself to the flexibility that women would want to have. So why be in a family in the first place? Why get married in the first place? And thus, those labor issues, coupled with the fact that they're just like many other Asian countries, there's not really a strong immigration system to bring people in. That's what makes America, quote unquote, great, because we have a way for people to become naturalized citizens. We bring people here on work visas that can contribute to the economy, and we grow through inflation. We take the best from other cultures and other countries and try to incorporate that into our own. And I think that's what separates there's a reason why the innovation in America is world leading, because of kind of just that you're bringing all these diverse experiences and minds together, and they're making something awesome. But we haven't really seen much innovation when it comes to that kind of stuff, like technology stuff, since like the 90s, when we were growing up and we were seeing TVs and cars flooding stores and dealership lots all over America. Those times have now gone, and they're facing the situation where they can't let rates on their treasury yields go up, even in the face of inflation. The first reality is Japan has been in deflation for decades. So this whole thing about inflation, okay, that hurts you and me here in America. If you're listening in Europe somewhere, that inflation's hurting you. But Japan hasn't seen inflation in a very, very long time. And so this is like, oh, wow, inflation. To think about, if a country is very heavily indebted, inflation is not necessarily a bad thing, because people will have to spend a little bit more, and to get what they want or need, they have to spend more to get the same thing. Right? Obviously, that's how inflation works. But when you have a country in deflation, a country who doesn't want to spend, so what they had to do to combat the deflation was keep a cap on rates, so that people wouldn't buy treasuries and sit in them. They want people to not be sitting in some type of reserve. They want people to be spending their money, and thus kind of contribute to the economy. But even with their yield curve control over the years, it just really hasn't really benefited them in any particular way. To fix that issue, it's going to take much more than controlling interest rates, but they're doing essentially what they can. But inflation now is getting above target. Okay, inflation's over 3% for them. Let's see if it's in this article. I'm not sure. Okay, yeah, over here. There's year-over-year inflation here. It's 3.3%. Okay, so they're going to have to start thinking about this. Okay, so people, we wanted a little bit of inflation, right? We want, like, in America, we want 2% inflation. In Japan, they'd kill for 2% inflation. Oh, now they got it. Okay, now it's 3.3%. And they're like, oh, wait, that would be us like having, 50% more inflation than we want. No, actually, Japan wants like just even like 0.1% inflation. So for us, it would be like having 5% inflation or something like that. Now they're like, okay, wait, inflation's getting a little out of hand. Okay, we liked inflation for a little bit, but we're willing to talk about raising their cap on interest rates on their bonds, in basically to control the people's spending, and this is something that most likely won't happen. Like, they've had these talks before. The Treasury leads have always kind of joked around about their interest rates and being capped at 0.5%, while the rest of the world is raising rates, and the rates on our bonds have gone up commensurately with that. But Japan is quote unquote considering it. So why would Japan release an article? Okay, I hate to keep going on about this, but this is what really affected the market today. Why did Japan release an article at 2 o'clock in the morning, Japan Standard Time, which would be like, what was it? Let us say around 10 a.m. Pacific, 1 p.m. Eastern Time, our time, and about them kind of tweaking their idea of yield curve control. Now, there is a couple quote unquote conspiracies about why they're doing this, and the reality is because they don't know, since they have no idea, there's no standard for them. If they were to tweak their standard on yield curve control, what does that do to their market? What does that do to markets in general? Why not, in their mind, let's play a trick and see if we can just release the news when our markets aren't open, meaning their markets, the Nikkei isn't open, and when the rest of the world is open, like the European and the American market, and just see what happens, right? We'll just see what happens, and they did it. This is like a glorified experiment for them. So let's go ahead and switch to the charts. I'm gonna transition over, and let's take a look at the smaller time frames on Tesla. First of all, we talked about the possible head and shoulders on an extreme neckline. And you can probably draw some other head and shoulder types of patterns, like something like over here, but the thing about it is you'd have to draw another right shoulder for that. Or if this is a left shoulder over here, and these two humps where I put for my head and shoulders could be the head, and you can have a different type of head and shoulders where the neckline would be going up to the right instead of going down. And also you can have, we'll just draw that out so you can kind of see what other people are thinking when it comes to their, and I'll use a different color hopefully. So this is one, and we'll use yellow, slightly different. And they would say that's the left shoulder, and they would say this combined would be the head, and this is drawing out a right shoulder. But I just don't think there's enough time for this to draw out an elaborate right shoulder. I think this would be more like my head and shoulders, where this is an immediate concern because we have a news event, coming out tomorrow. So we'll go ahead and undo all that. Okay, just take a look at what other people are talking about when it comes to technical analysis. They are considering this to be the island reversal. Now, we didn't really know if that was be the case, but an island reversal essentially is you have a gap up, you have a little consolidation of some sort, and then you have a gap down, creating this price action, which is kind of floating in the air. While there was a trend going up before the reversal, then the trend reverses going down after the island. So that is something people are talking about as well. Okay, but let's look at what we were thinking our price action could have looked like. We were talking about how it's going to look like if we were to sell off. There's two different ways to sell off. Do we find a base here at the 260 just based off the amount of put options are developing in the market? And we'll take a look at that very shortly. Or are we looking at, okay, if this goes through, you're going to perhaps actually draw out that head and shoulders we're talking about, getting down to about a 250. And this could be I hate how realistic this looks. This could be like a 250 on a bad CPE print, on PCE print tomorrow. But also at the same time, Tesla's exhibiting much more weakness than its 1.8 beta should be really representing. So on another sell-off, if we don't base at the neckline of this, which would be a 1.78% drop, then you're looking at going down probably to the gaps that we have looked at for weeks, which would be in the area. We'll draw a box. Some of the names like Microsoft, they would get to their gaps and they would stop above it. And if we stopped above it, it would be around a 241 over the course of 1 to 2 days. That would be, with a bad enough inflation reading, you can get a 5% drop in one day. Because let's measure out our reversal. So before we talk about the timing of the Japan yield curve control article that came out, here is the high for today. And if we were to draw to the closing price a range, it was 5%. So to drop 5% in a day and hit that, that would be super sad. To hit the top of the gap, it seems far away, but the reality with how Tesla's moving, it's really not that far away. Once you pass this low, which is, okay, we'll draw a line so we can see how precarious we are. If we get to this price, which is 253.90, 254 essentially, if you drop below that, there's very little hope for you, and for us, I'm sorry, that we catch much of a break until we get into our gap. And the reality is, if we're selling off that much, you can probably think we'll be selling off for many days, and you'll have a pretty bad looking Tesla chart. Unfortunately, it would be like one of those crazy peaks and valleys that we saw a couple of years ago at the all-time high. So it is looking like it would be the worst sell-off pattern that we kind of drew, which is goes right through this 260 number and sells off into the weekend. It's really going to be dependent on the inflation reading. I mentioned this many weeks ago, but how Thursdays are treated by the market is a really good setup day for the last day. It makes, if you want to go long, it makes things very, very cheap because you have 1 day till expiration. You have an event during pre-market hours that will allow gap ups, so you can take profit very, very quickly, and you can get out of your day trade. Your swing trade in the early morning, and you can take an early day off if you're a trader on Wall Street and just chill out and go home. But for now, let's look at the ominous 2 a.m. Japan Standard Time release. Now, let's look at what that looks like on the chart. Let's draw a line, a vertical line at 1 p.m. Eastern Time. I wonder where 1 p.m. Eastern Time is going to be. Oh, it's right here. And I'll make it a different color. Let's do light blue. We'll make it a little bit thicker. Interesting. If you can see on the chart, that is 1 p.m. exactly. 1 p.m. exactly. So from that point on, from 1 p.m., from the top of that candle, let's measure out. We dropped 3.8%. Crazy. So what would that mean if Japan was to raise their rates? Well, the reason why people are buying bonds in the first place is it gives them a return based off an interest rate very comparable to their country's central bank rate. Okay, so in America, if you buy a bill or a bond, you're going to get a decent rate because our Fed funds rate is something like 5.5%. So on a very short-term bill, you can probably get over 5%. So if Japan was to raise their rates, that would mean people could now get an actual yield on a Japanese bond if they were to get one now. What would that mean? It could possibly mean that people don't have to worry about getting American currency, buying American bonds. People in Japan can just buy bonds in their own country, support their own country. What would that mean for us? Well, people would sell their bonds in America, maybe buy bonds in Japan. What does that look like? It looks like yields increasing. Did the yields increase today? Yes. Just like Gary Black mentioned, the 10-year was up 14 basis points on that news already. And we can look at the DXY. DXY is up pretty considerably. This is just the dollar index. So if Japan raises their rates, their yen will get stronger in value. It's very, very weak right now. We can actually just look at that real quick. USD to Japanese yen. Oh, yeah. Okay, so their yen got stronger. And that means our USD is getting weaker in comparison. So Japan was going to have a CPI print, their inflation print today. And I haven't looked at the chart yet. I believe it's coming out very, very soon. So I'm going to click on the chart and see if there's any change to the price here. So it came out at 7:30 Eastern time and it sold off a little bit. So there wasn't much of a strong reaction. But now that we're on the chart, now we can take a look at how the Nikkei's futures market was doing during that release of the article. What time did that article come out again, guys? Was it 1 p.m. Eastern time, 1300 hours? Oh, wow. Okay. Look at that. I mean, their drop was considerable. This was a 2.37% drop in the Nikkei futures market. Not that great of a situation. Not great at all. Okay. So let's go back to Tesla. And so we can kind of explain to ourselves, okay, maybe that's what happened. Okay, Tesla is not looking so great because people are freaking out about the change to the Japanese yield curve control potentially. But was it really just that? Because let's take a look at how Tesla performed at the open. It gapped up and immediately sold off into the red. That is not a great look. And I guess it was getting bought up, over the course of the day, but not really convincingly so. The volume was much lower. And as things were selling, volume was increasing. Kind of makes sense though. And so this took so long just to develop. Like if you were to measure that low, that took 2.5 hours to start selling off. And it sold off in much quicker time than that. This all happened within 3 hours, and within 2 hours, it was already down 3.5%. So not a great look, but you probably know that a lot of the other things sold off as well. The NASDAQ sold off kind of at the same time. Let's draw a line. For fun. So instead of hearing people talk about, oh, there is this article that came out in Reuters, and people are covering up the range of Teslas, and there's like this conspiracy. Oh, what happened at 1 p.m. Eastern time of the QQQ? And it never made a significantly higher high, right? That makes sense, right? How about this S&P 500? When this red candle started going, what time was that? Oh, that was 1 p.m. But I want to look at how I want to add and compare Tesla's line chart. Oh, sorry. Tesla's line chart to the S&P 500. And you can see how there was not this sell off to flat for the day for them. That was not a thing. Like there wasn't this dramatic sell off in the morning. That was just a Tesla thing. And then when it decided to sell off completely, it sold off in a way that was much, much worse than any other ticker outside of your casual meme stocks, for instance. How about the NASDAQ? The NASDAQ is a pretty tech-heavy index. So let's take a look at Tesla compared to the NASDAQ. Horrible performance. So NASDAQ sold off a little bit. It was well over, over 1%, over 1.5%? It was over 1% from the open still. Whereas Tesla completely crashed to flat and dipped into the red before getting bought up and getting sold off completely. Compared to the rest of the names, Tesla is just not getting a lot of interest. It's just not. We want it to be a part of the AI story, but it isn't. And the real only AI story out there are the people who provide chips for the capex spend that businesses are going through. And what would that be? How about Nvidia? Nvidia's getting bought up in the after hours. It's up $3 a share. Let's switch over to Tesla. Tesla is up 40 something cents. I can deal with that. Okay, so let's look at Nvidia. Let's overlay Tesla on top of the only real AI story out there, which is Nvidia. Catastrophic. Nvidia had a nice gap up. It dipped a little bit when Tesla dipped, but Tesla went all the way to flat, by the way. And it just went back to its opening price, but rallied very hard and then sold off like everything else did. I bet it sold off at 1 p.m. Oh yeah, look at that, 1 p.m. But it was a little bit more resilient in the sense that it didn't, let me turn off Tesla. Nvidia didn't get to its opening price. It didn't turn red. A lot of the semi names did pretty decent today. Semis were, SMH was very, very strong. And it is strong after hours still, right? Because all these earnings reports from these tech companies are saying, we're spending more money. We'll be spending more money. And that money means buying more chips, buying more compute. And currently, NVIDIA is the only game in town for that. And we can once again remind ourselves, even the QQQ, which represents the NASDAQ, went red. Okay, it went red. So even though it's a tech-heavy index, and NVIDIA did not go red, and Tesla, the QQQ, SPY, they went red. So currently, what we're looking at here is maybe a scare to the markets with the Japanese central bank leaking that news article, or again, at 2 o'clock in the morning, to kind of understand how markets would react before they actually make a serious move when it comes to the yield curve control. That was almost like them using our market hours to kind of test the waters. But it kind of shows how weak and how skittish the market is, or that the participants are. They're looking for an excuse to sell. A lot of funds are getting pretty heavy in the market, and so they're kind of tentative. Like, they don't want to get caught with their pants down, so they're really quick to sell. They want to get out if things are going to go bad, because the market's been going up for quite a while, for many, many weeks. I know we have a different experience now lately with Tesla, since we've been ranging for a little bit, and it's been getting pretty frustrating, I assume, for a lot of you out there. So I'm right there with you. But looking at the chart right now, it's looking pretty bleak. Let's look on a bigger time frame. And you can see here that we're hopefully maybe making a bottom when it comes to the stochastic RSI and the RSI. But the reality is this could sell off all the way to the gap, and the RSI would just look like it just bottomed out at that point. So there is a little bit more room to go down. I don't want it to go down, but there's very little news that could make it go up other than really good inflation. Something internally coming out from Tesla that could be good news. Getting some clarity on what automakers they're working with on FSD, getting pricing information on the Cybertruck, getting a release date for the Cybertruck, getting a release date for the Model 3 Highlander, all that kind of stuff. Maybe some clarity of the revenue they'll be getting from the deals they made for superchargers with these OEM manufacturers as well. But the chart is looking pretty bearish, and when Tesla has really sharp sell-offs like this, it doesn't necessarily bounce back immediately. And you can see that on these red candles, that, okay, maybe it sells off and it'll consolidate for a couple of days. So if it sells off, there's not much like a V-like recovery that comes from that. What we can hope for is essentially a day of consolidation for Tesla and a bounce up. But if you're to look when it sells off over here, for instance, over here in the middle, and this was on June 20th. It sells off even more, gets bought up, consolidates, sells off even more. This is a 2-day consolidation, and it gets bought up. Looking back in the chart before the big bounce, this is during spring. Anytime you see it sell off, it doesn't necessarily have strong recoveries. Maybe this right here would be an example, but 1 to 2 days of consolidation, then another move of some sort. But yeah, when Tesla sells, it sells pretty hard. It looks like this is, I don't mean to, bring back really bad memories or terrible flashbacks to the end of last summer. But here in the August, September, October area, you can see how violent Tesla is when it's selling. There's not much conviction. It's looking for a reason to go up, but no one wants to buy, and it just keeps selling and selling. I would say this to you right now. If you're very bullish on Tesla, just be very, very, I would say you could try to find a friend or a colleague that is a little bit more unbiased and ask them, is this a story you'd buy? If this is for people that are big fans of Tesla, who are big fans of the personality that's Elon Musk and his companies, that benefit from that or don't benefit from it. Is this a story from an unbiased person that they want to get into this right now? Or would you feel more comfortable? Would you buy 1 share of Tesla or 2 shares of Tesla or 1 share of Nvidia? What are the prospects when it comes to the AI story through the lens of an AI chip manufacturer, or the one that is making cars and doing FSD AI currently on the side? I think the safer bet is to go with semiconductors, and that's why you're seeing outside strength in semiconductors today, especially with very little buying and very little interest in holding Tesla shares from other investors or other traders, to be honest with you. It's a very bearish look, and I don't mean to sound so bearish, but it is a very bearish look. There's nothing about the price action here that's pretty at all. There's nothing about it that is redeeming, and there's not going to be anything, I don't think, coming out from Tesla that's going to save the price action in the near term. The only thing that will save it is a core PC print that misses by 0.2% or more, and that would make the whole market go up because it will signal an end to the interest rate hikes and end the story on inflation. So let's take a look at one more time at the Nikkei. The Nikkei is selling off, so inflation must not be too hot for them. So before we end the video, I want to switch back to our browser and just take a look at the Max Pain site for Tesla. So currently there is 183,270 calls, strikes for 270 in the system. And just to let you guys know, this doubled within today. So as the stock was selling off, this was getting bought up from somewhere in the range of the 80 to 90,000 range, and it doubled severely. Yesterday, we talked about how there was so much interest at the 270 put price, and it didn't reflect in the volume chart, but now we have that in now today. There was 74,959 of the 270 puts. Just to remind everybody, the stock price of Tesla was $255 at the close. So look at these three measurements for puts. They are all very high in number: 100,000, 92,000, and 75,000. And of course, at the 255 strike, 62,000 almost of puts are almost in the money or in the money. If it was to sell off another 2%, you can throw on another, couple 100,000 puts. They're all in the money. They're all in the money. So let's say if you're to say, what would a call wall be based off the volume of Tesla's options for the expiration of tomorrow? Well, 265 has 138,800, 117,000 at 267, 183,000 at 270, 51,000 at 262, 56,000 at 260. We're currently at 255. There's only 25,000. Okay. And so if you were the market maker tomorrow and you didn't want to pay out a lot of calls, being right at 254.99, there's no calls here. At 254.99 down to 252.50, if you're in that range, if you can pin Tesla into that range, you would be very successful, unfortunately, if you're a market maker. Especially if you own all these puts. We were wondering who owns these puts, like who has all of these puts, and the reality is it's probably the market makers who have bought them. And I think it's becoming more evident because they're not even trying to save the stock. Okay, so let's look let's do a quick measurement on the chart to see what would it take to get over the 260, 265, and 270 strike point to get all those puts out of the money that are in the system. Let's say that the market doesn't own any of those puts. Where would Tesla need to be? How much would Tesla need to go up from its closing price? So to go up to past the 260, it would need a 1.75% move. That's pretty realistic. 265, it would need 3.75. And to get above 270, it would need a 5.7% day. I don't know if Tesla really has it in itself for a 5.7% day right now, but we'll see. Guys, just be careful tomorrow. If you need to hedge, just do it before 8:30 a.m. Eastern, 5:30 Pacific, and have a wonderful night.